price of Bitcoin will hit 1 million in 5 years' time. Possible? The short answer is yes.
Oh, don't look so shocked.
Do not believe in what I say per se. I would strongly encourage all to listen with an open mind and then decide for yourself. And the next question is, should we buy Bitcoin now? Stay tuned while I break it down for you. A bit about myself. I'm a trader with 10 years of experience trading in Forex, commodities, equities, as well as in recent years, cryptocurrency. I was an ex-auditor in regional hedge fund and private equity firms. So before I move on, right, please remember to slap the like button and leave any comments or questions, and I will be more than willing to help. So it might take only 15 seconds of your time, but it really meant a lot to me, so thanks. So today, as what the title shall suggest, right, I will be talking about Bitcoin, and most importantly, will the price hit 1 million in 5 years' time? I'm sure most of us will be quite confused about this topic, as not many will know what exactly is Bitcoin all about right in the first place. Hold on. Let me see whether the stream is working. So ultimately, right, the whole objective of this stream is I try to keep this as short as maybe less than 15 minutes or less than 10 minutes. I try to justify why it is probable that Bitcoin will reach $1 million per Bitcoin in 5 years' time, and if so, how should we trade Bitcoin? So this is a very big question for most of us. So let me briefly explain what is Bitcoin first, because I'm sure most of us will be kind of beginners of what is going on. This is more like a Bitcoin for dummy. So in 15 minutes, you kind of know everything about Bitcoin, if not at least 80% or 90% than most of the other people out there. So you know there are many components about Bitcoin. So if I were to give an elevator pitch, what is Bitcoin? Bitcoin is the truest money we should have had since the beginning of time. And just to make it easier to digest, right, why is gold always considered the standard for money even during like the ancient days in Egypt and Mesopotamia? Why is it always gold? Right, why is it always gold? Because gold, one, it is finite. The fact that you can't find it everywhere, okay? 2, out of all the precious metal out there, it is the most stable metal. 3, it is actually very difficult to find gold. Like, it involves a team to scan the gold, after which you need to get the labor, you need to feed your workers to dig out the gold, and after so much effort, you only can dig up just a bit and mine a bit of gold, and it is expensive. So bringing up to Bitcoin, Bitcoin actually operates in the same way. So Bitcoin is like digital gold, but it's different. Gold is like something tangible whereby you can carry it around, but Bitcoin is something like a digital and it's intangible. But the fact that Bitcoin is scarce make it so unique. I'm sure many of you guys will be wondering, what do you mean by scarce? Bitcoin is just Bitcoin, right? So for all of you that are beginners of what is it about, let me explain. Do you know in Bitcoin, the total maximum number of Bitcoin that can be in the whole market circulation, right, is only 21 million. So once 21 million of Bitcoin is mined, right, there'll be no more. That's it. No more other Bitcoin. It's just 21 million. So this is like a very scarce resource. There's no other way to create, not like those kind of banks monetary policy whereby the banks, the government can just keep printing more currency again and again and it's infinite. But Bitcoin is different. It's something like gold that's scarce. Number 2, Internet of Money. What do I mean by this? Think about the time before the internet. How centralized the flow of information was. Basically, right, if you wanted information, you could get it from few major players like New York Times, Washington Post, and others like them. Today, thanks to the internet, right, information is decentralized, meaning to say that you can communicate and consume knowledge from around the world with a click of a button. So Bitcoin is like the internet of money. It gives you like complete control over your money. You, and only you alone, can access your funds. No government, no banks can actually freeze your account or confiscate your holdings. It's a form of money that no government or bank can control. Only you yourself. So decentralized. What do I mean by decentralized? Meaning to say that there's no one computer to hold a ledger. With Bitcoin, every computer participating in the system is also keeping a copy of the ledger, also known as the blockchain. So if you want to hack the system, right, you have to take down the thousands and thousands of computers which are keeping a copy of the ledger, which is also constantly updating it. So as you can see, it's near impossible to do so. So the security level is that high. And the last thing that I think is the most important is it is verifiable. What do I mean by this? You know, it's a type of currency that is not built on trust. Because if you look at the back of the US dollar note, right, it says, in God we trust. Trust in this dollar. It is money. It is legal tender. But can I go to the Fort Knox to count all the gold? No. But Bitcoin can verify everything. Everything is timestamped. There's verification. It is not a currency built on trust. You trust based on your own verification. This brings me up to something that is quite off topic. So pardon me for a while. Allow me to digress. You know, recently I saw many YouTube advertisement, right, that talk about trading, about their strategy, about random courses they are giving, showing random screenshots of how profitable they are. But come on, man. You could be just showing some profits and not your losses, and it's more like selective showing. I strongly believe that stats speaks louder than words. So click on the link below if you want to check out my stats. So just a side note, this content is actually partly sponsored by eToro. So if you have the desire to learn more about trading, but don't have the luxury of time, click on the sign up link below, message me online at AlphaSmurf, and I'll invite you to my private Telegram group. So some key things you have to bear in mind. The concept of halving. Oh, this one is a bit confusing for most of you guys, but I think I have to explain. You know the concept of halving, right? Every 4 years, look at this countdown. 146 days to the halving. What does it mean? Every 4 years, the mining of a block reward is cut in half. So in short, right, halving means that the block reward is cut in half. This process is predetermined and will continue until the last Bitcoin is mined sometime in the year 2140. So the process can have long-term effects on the price of Bitcoin over here. So if you look at the Bitcoin over here, right, the historical record in year 2009 January, every 50 Bitcoin is created every 10 minutes. So during the first halving in November 2012, right, 25 Bitcoin created, and the price per 10 minutes, right, the price is $12.22. So the second halving, July 2016. 12.5 Bitcoin created every 10 minutes, price 657. And the incoming one, that what you see over here, which is May 2020, what would be the price like? This is going to be very important for conceptual reason for me to explain in the later part of this whole stream. I can see many confused faces over here, but I can briefly explain on the technical side of Bitcoin transaction. So, you know about this, right? All Bitcoin transactions, right, are put into blocks, put into blocks. And once they are placed into blocks, right, they are verified. And this is done through miners. So to cut out all this confusion of those who don't know what is miners, these miners have economic incentive to provide a lot of computational power and electricity for this verification process. So basically, right, when a miner discovers a new block, he will get rewarded based on the number of shares hash that was submitted. So that they will have miners that put in a lot of effort, electricity, computation, right? Computation power to make sure these blocks are verified. Okay, that's the whole thing about this blockchain. That's the reason why miners will get this benefit of Bitcoin. So now comes the important part. How is prices of Bitcoin affected? Just now I say about the prices, right? At the start of the presentation, I talked about ultimately the price of Bitcoin maybe will hit a certain level. Now this is the concept part. Everything is controlled by supply demand. I'm sure most of you guys know about this, right? So, which means as long as there's buyers, they will create the demand, and if there are suppliers, there are sellers, you create the supply. But I'm not talking about those retail buyers and sellers that like us, because bearing in mind of the size of this Bitcoin market, right, just you selling 1 or 2 Bitcoin will not affect the supply and demand equilibrium. So it will just stay relatively unchanged. I'm talking about those market makers, those whales, large investors that decide to suddenly like sell 10,000 Bitcoin today or buy 10,000 Bitcoin tomorrow. That will drive price up and down. So now that we understand this concept, right? So who exactly contribute to the demand? Let's talk about demand first. Buyers. Alright? Buyers. You and me, those whales, those big investors that buy Bitcoin. Competitors. What do I mean by this? Those Ethereum, in recent news, right, I also can call it geopolitical factors. For example, in the early stages of China introduction of their cryptocurrency, which could possibly result in the decline of Bitcoin price action, because if people know that there's alternative of Bitcoin like this China market, the demand will be lesser. That will affect the demand as well. So what about the seller? Seller are those people that sell. But you must bear in mind of one thing. Bitcoin, the Bitcoin market is a bit different from the typical market of the currency market or the commodities market or the equity markets, whereby there's buyer, seller, demand, just like this. It involves one more factor. The factor is what? The miners. This is one of the most important thing that I'm sure most of people don't know the concept of this. A lot of people don't understand is that miners are not holding onto the block rewards. They get this financial benefits, right? They are not holding onto it. Maybe in the past, but it is very rare today. So think of it this way. If you are a miner of this gold, like a typical gold mine, right? Your incentive is to mine and sell it to the local currency circulation. You straight to the market circulation. So similar to miners, right? They are the main contributor to the seller pool, contributing to the supply. So why is this important? We just mentioned the concept of halving, right? This is important. Why I'm going to prove Bitcoin price will shoot up very, very fast. So let's talk about supply. Today, the supply the selling power Bitcoin every day, the supply 1,800 Bitcoin a mined every day, and the price of Bitcoin is around 715 today. So you can check out the price very easily over here. Let me just do a quick one. Now the price is 7175, but let's assume it's 7150 for easy computation. Okay, so which means for the price to stay equal at equilibrium, right, you have to need a equal amount of demand, which means every day there's some buyers that reach amount of 12.8 million of Bitcoin, 12.8 million USD of Bitcoin, okay, to stay equilibrium. As long as there's more of one side, that will shift the price to one level. More demand, shift the price up. Less demand, shift the price level down. So that's how it works. But we just talked about halving. So which means by May 2020, right? 2020, the amount of Bitcoin supply that is generated in the market will be just 900 per day times 7150. That is 6.4 million. Do you know what's the concept of this? What is the impact? This means that previously, you just need 12.8 million demand to barely to have this equilibrium of price. Suddenly, after the halving event, that supply cut into half, but the demand will more or less stay unchanged, or maybe more in the future. I will explain later that. So which means, what would that do to the price? So this comes to the important part over here. You know, there's this model called stock to flow model. It's a pricing model to predict the price action, of Bitcoin. Let me explain like this. Okay, this is the Bitcoin price action model. Let me make it bigger so that you guys can see. Okay, I think here like this is clearer. So as you can see from here, right, the very colorful one is the price, the actual price of Bitcoin over the years. Okay, so let's talk about the first halving. The first halving occurs somewhere around November 2012 November. Look at this. Right after this halving, the price, which was previously at $10, jumped all the way up to $1,000 in 2014. Let's talk about the second halving. That was sometime in I think it's July 2016. After that event, the price of Bitcoin, look at this. Previously the price was like around 800, but no, not even 800. It's like 400-500 because there's some correction. It pushed all the way up to near 19,000. 19,000. That's the second halving. Picture this. The next halving in somewhere around May 2020. It doesn't take a genius to know what is it. What would be the price going to be like. But now's come the important part. Someone will just ask me, hey Alpha, if this is public information and everyone know is going to hit 100,000 in like 1 or 2 years, right? Why isn't everyone buying Bitcoin? You know, I have two reasons that I can briefly explain. I don't think many people have done a good job in answering this question. Why is not everyone buying Bitcoin? So let me explain. The first reason is not many people know about Bitcoin. I'm not sure whether this is working. Let me make it. I think I can close this because this is a bit laggy. So not many people actually knows about Bitcoin? First reason, not many people adopt Bitcoin. So let's put into perspective. How long do you think it will take for the mainstream to adopt Bitcoin? Some people will say 5 years, 10 years, whatever. Well, let's look at the previous revolution of money, right? In the 16th century, there was this radical proposition to replace gold with gold certificates, written on paper. So if you think people find Bitcoin weird, right? Imagine the time when people were told that gold is no longer their money. Bits of paper, like you got to be kidding me, right? That idea was so radical that it took 400 years until it became broadly developed in the mainstream society. So the next one was in 1950s, credit card. So with credit card, right, people were told that the piece of paper that they have with the government seal on them and legal tender are now pieces of plastics with a company number on them, and that's it. Don't worry, you will get paid eventually. And it took them almost 50 years for that to become mainstream. I remember back in the 90s, right, my uncle went to, was telling me that he went to Europe and he had those credit cards and he couldn't even use that to buy anything at all. So you can see the adoption level is so slow, not until like 50 years later, people started to adopt it. So the second thing is not many people understand what is Bitcoin about. So there are a variety of surveys that are done with slightly varied results, right? But I would say that the number of people who currently use Bitcoin is around 0.6 or less than 0.6% in the entire whole world. 0.6%. So which means out of 1,000 people, probably there's only 6. That's how little they are. So according to this CNBC personal finance survey in 2018, right, 27% said that it is too difficult to understand. 18% said that they believe that it's a scam. And the rest say that the risk is too high and they are not interested. You can see that those who know about Bitcoin and passionate about this, as for you guys that are still listening down here, right, it's a very small and passionate niche population in the whole world. Not to say that all this data science, not to say that those people who know further, those data science about this model, stuff like that, literally less than 0.1% knows about it. So most people don't like looking at this kind of stuff. So you should be proud of yourself if you're still here listening to all this stuff in a deeper level. So you know what? Even Warren Buffett, right, that time said that Bitcoin is a rat poison. He said Bitcoin is a rat poison initially, right? But stop here for a moment. Do you know that what is in Berkshire Hathaway portfolio? What is in Berkshire Hathaway portfolio? Bank of America, Bank of New York, Goldman Sachs, JP Morgan, all the big banks are in his portfolio. Would Bitcoin be a conflict of interest with whatever he's investing? Maybe that's a reason why he said it's a rat poison in the first place. But this is something for you to ponder about. So my view, is there a chance that Bitcoin value will go to 1 million? The answer is yes. Let me shift this to one side so that you guys can see a bit more over here. The answer is yes. However, I won't recommend you to put all your eggs in one basket. Don't go all in on Bitcoin, and you don't have to have no exposure to Bitcoin as well. You need to determine for yourself your risk appetite and how much you are willing to invest. So, is there a chance Bitcoin will decrease in value? Yes, as well. As mentioned, there's various unforeseen reasons like geopolitical reason, the protocol breaches, and maybe one day hackers get so refined that they can hack thousands of computers at the same time, which is highly unlikely. I don't know. This is an unknown factor. So this is going to be a very exciting journey for the next few years. So the next question is, how to enter and when to enter and buy Bitcoin? As mentioned, right, some of my traders know that I tend to see charts in a different light. So as I told some of my traders a few months ago, I told them, do not jump into Bitcoin, don't buy yet, unless they have a bigger risk appetite and willing to have huge drawdowns over the next few months. I even post on eToro feeds talking about they should not jump into trade. Let me show you. So I posted in eToro feeds. Let me see if I can show it over here. I think it should be over here. Let's see. Okay, this is the one. Let me shift this over here so you guys see. I posted this like few weeks ago. I told them, even last month or a few weeks ago, don't jump into trade yet. Based on historical track record, I talk about these halving issues. I talk about the technical analysis and the way I see chart. I'm saying that there will be one more down move incoming before the next up move, and even that up move could possibly be a correction for a further down move. So there's a lot of things you have to bear in mind before you're entering. But if you're a guy that don't have a bigger risk appetite and willing to lose those big drawdowns of 20-30%, then up to you. But for me, the time is not right yet. So as I said, right, this stream is partly sponsored by eToro. So if you have the desire to learn more about investing, trading, and how to and when to enter crypto, right, you can message me online at AlphaSmurf. So, and I will add you to this private Telegram group. I will keep this short, and hopefully I will see you guys soon in my future crash course. Okay, hope you guys have a clearer understanding of what this is all about, and feel free to leave any comments or questions, and I'll be more than willing to help you guys. So with that, I will cut the stream. Thanks for tuning in. Bye guys.